We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, doing a full transition once again from the dip area to the rip area today on 42 vision. And today's been pretty volatile, and within the volatility, our SPY bot at 11:15 a.m. sent out a bull indicator, and from that moment forward, inflows crossed the midpoint to the upside. Full strength there on 42 vision, and call options went up 200% plus within an hour, guys. And as you see it popping up there on the screen, within the options chain, some options went higher than that. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description. To our 42 vision indicator, getting connected over to the bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY. The FOMC minutes came out today. I'm going to share with you guys my thoughts on that and what key levels to watch here and what the inflow versus outflow is showing. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Netflix bot. Our Netflix bot sent out a bull indicator since 7:11 a.m. And from that moment forward, inflows crossed the midpoint to the upside. Full strength there on 42 vision, into the bell and after the bell, and call options went up 250% plus within hours, guys. And as you see they're popping up within the screen, within the options chain, some options even went higher than that. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, doing a full transition from white with red borders, which is what I call the dip area, to bright green bars today here of the rip area, right? If it's your first time coming across the channel, this is 42 vision, which allows us to see the dips to the rips and the rips to the dips and where the weakness and strength lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here, and you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY, the S&P 500 index, having a very volatile day, right? Starting to push itself up at the beginning of the day, and then in the second half after that FOMC meeting, pushing downwards. And if we look at it here, it's still under a bull indicator as it fights to stay above 382. It keeps on trying to find support around that 381 to 380 area. It touched it briefly here earlier in the morning, and then it bounced back up, and here it is fighting to stay above 381, 382, but the outflows here have crossed. This is a very interesting chart setup here. We have a lot of divergences going on, and we're going to break it all down in today's video. And what's most interesting is the same rejection that we've seen for the last whole entire week and a half has been around 385, 384, 386 area. It cannot actually break above that. We just keep on touching it, rejecting it, and going down. But right now, we're under a bull indicator on the 30-minute, and the same thing here on the 1 hour, guys. That bull indicator popped up at 382, and these outflows have not crossed just yet. This is where it's getting very interesting. We're having a pullback, and if those outflows cross significantly to the downside, it could start to reflect pretty quickly into the chart and possibly even cancel out this bull indicator. Now, let's talk about what created the volatility that we see here in the second half. And if you zoom in on the 15-minute, you could see that bear indicator and outflows dominating. Well, you see it popping up here on the screen It's the Fed statements in the FOMC minutes. And as you see there, Fed members do not see any rate cuts anytime soon. Now, it was a unanimous vote and they all agreed on this. This wasn't like they're separated or trying to figure it out, or there's like a tug and pull and let's see who's actually right. No, they all actually agreed on this. And that is going to be very interesting how things play out for the rest of this year, and how are they going to approach the rate hikes that we see coming. Are they going to go ahead and front load them with 0.5s, 0.75s up to the point that they see, which they actually raised up the target rate to 5% or more? Or is it going to be a slow 0.25 but for the rest of the year, and no rate hikes actually slowing down or stopping or even being cut for this year? A lot of people were projecting or hopeful that would come in the second half of this year. Now, this isn't guaranteed. This could change any moment, but right now that's what the markets know, and they're going to try to price this in. But when the markets know something that they anticipated, or even if it's negative news, the markets like stability, guys. And that's what's interesting about this, because they basically just told us the map out for the rest of this year. And if the markets try to go ahead and make any dovish statement out of that, or find any hopium in that, it could create some strength. You never know. But right now we have outflows below the midpoint. And when you zoom out, this has been pure dip areas to rip areas, dip areas to rip areas for the last several days, guys. This has been literally a lot of volatility. And as I've stated, not financial advice, it's been a lot of opportunities to learn and grow and maximize within these movements. And that's what I've been doing. And that's what the markets are showing us and giving us right now, right? No clear direction up or down, but lots of movement and lots of opportunity to learn and grow. And we could see here that the outflows right now are dominating on the 30-minute, and the stock market is trying to push up higher here. Now, one key resistance level in this zigzag here in the last several days, if you want to call it consolidation or volatility, is 385, guys. And above that is 388. These are key levels to the upside if the bulls are going to have any strength here. And to the downside, the key support level has been 380, then down towards 377, 378 area. Now, when you zoom out here and we look at this from the 1 hour, this is very interesting because the 30-minute, the outflows cross, and the 1 hour is right there in the midpoint. This is where it becomes crucial for tomorrow. This is the first thing I would watch. Are these inflows going to come back up and start having strength, or will they cross over? Because if they do, it could quickly start to reflect into the chart and eventually test support levels that can end up canceling out this bull indicator from way up here at 382. And right now in the aftermarket hours, it's at 383.79, guys. Now, when you look at the 2 hour as well, you could see in the 2 hour how things are looking, but there's still some strength, right? It's above the midpoint at 3.27, under that bull indicator since 379, 380 area, and it's been fighting to stay above throughout this volatility, but it keeps on rejecting, guys, that 385, 386, 387 area. This is critical. If that's accomplished, then 390 and then 392 would be critical based off the history of the chart of the supports up here that we were watching after those inflows picked up, and that bull indicator that was strong back here on November 10th. Now, in this zigzag and back and forth on bigger time frames, we are seeing still some strength here. If you even go to the 4 hour, you could see it's still above the midpoint. But that 1 hour crossover will be crucial because it could start pulling down the 2 hour and the 4 hour with it. And when you go into the volatility here of the 15-minute, these inflows are trying to pick back up even though the outflows are dominating. And I'm going to show with you guys again, the first support I'm watching is 380. To the downside below that is 378, 375. And to the upside, the most crucial resistance is 385. And above that will be 388 and then 390. Those are the critical levels right now within the volatility and within these moves where the bulls and bears are putting up a battle here. The FOMC minutes seems kind of bearish, but we need to see what Jay Powell has to state in the next meeting later this month. That can kind of put the stamp on it of how dovish or bearish this could turn out to be in the long run. But right now, the markets are pretty volatile. They've been fighting to stay above 380. They keep on rejecting 385. And these are critical levels to the upside or downside. Outflows are dominating here on the 30-minute. And this is what I would watch here very carefully, as it's right there in the midpoint. Is it going to cross down? Is it going to cross back up with strength? Because when it does have strength, you could see there today in the pre-market, it went from 380 to 385. And yesterday when that crossover happened, it went from 382 to 378. So things get really significantly pushed to the direction of the outflows dominating or the inflows dominating, right? So that's going to be critical. And we're under a bull indicator here on multiple time frames. So I'm going to watch here if the bull indicator can continue to hold true on the 30-minute and these inflows pick back up. Once again, that 1 hour is going to be crucial, and how things are looking here within the volatility as these inflows are trying to come back up. And if it could cancel out that bear indicator from way up here at 384 earlier in the day on the 15-minute. As always, guys, thank you guys so much for watching, and let's make some money.